Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And good afternoon. Welcome to my podcast. My name is Phil Grande, philsgang.com. We're a teaching group. We've been teaching traders like yourself, retail and traders for over about 30 years. And we keep it simple for you. So check it out. Go to philsgang.com and hopefully we can help you. I know we can. It's free for 10 days. Well, let's get started. Tomorrow, for the first time in 30 years, the Fed, Powell, is going to cut rates when there's inflation rising. Now, he's using the excuse, I have to because the labor market is so terrible. Look at construction jobs. We haven't seen construction spending cut this huge in years. Look at the construction jobs falling apart. This is awful. We got to fix the labor. No, that's a lie. He's using that as an excuse. He said, I lost 1.5 million fake jobs. We didn't really have those jobs. They're fake. I got to fix those. I got to fix the 375,000 full-time jobs that now have been replaced by 600,000 part-time. I got to do that. I got to fix that over inflation. What are you, nuts? Inflation is what you got to fix first because you cannot create jobs in an environment where we have record delinquencies and car payments and credit card payments and everything else. We've never seen delinquencies like this. In 6 months, personal bankruptcy up 24%. So here's my point. How are you going to create jobs? I mean, you're going to drop rates, so okay, everybody's going to buy a car now? Everybody's going to go to the furniture store? No, they have no money. People are tapped out. Don't buy into this BS. It's a bunch of crap. He's doing this to keep driving the stock market. We've never seen a stock market driven solely by stock buybacks. That's why he's doing it. Remember, he works for Wall Street. Don't believe this crap that he is independent, that the Fed is independent. They're not independent. Go all the way back to 1902 when we had the terrible mess back then, another crash going on, and the bankers back then, the big banking families, the Rothschilds, the Rockefellers, all those folks, remember, there was no central bank back then. And so what they did is they got together and said, look, we keep on taking the brunt of all this. We have no central bank. Nobody can help. We got to put our own money in. In 1902, that crisis, it was J.P. Morgan who made sure the economy didn't go into a depression. He put the money in there. He got it going. So that's when they decided, well, we're going to start a central bank, and it'll be the lender of last resort. So my point is, it's a terrible thing, this Federal Reserve. So the idea behind the Federal Reserve was to take care of the wealthy, take care of the wealthy families that controlled all these banks. Nothing has changed. The Federal Reserve takes care of the wealthy families, the top 1%. Just take a look at the stock market, for God's sakes. Just look at the stock market. I mean, all these stock buybacks are just insane. What it's done with the market. So again, when you see Powell cutting rates into this inflation, instead of raising to fight inflation, he's working for the top 1%. Cutting rates to keep the massive stock buybacks going. Now, remember, the total U.S. household net worth, we talked about this the other day, okay, is a record $176 trillion. Now, in quarter two, 2025, it topped 1%. Now, the 1% rather holds 40 trillion more wealth than the 50% bottom combined. Let me say that again. The top 1%, we're talking about the Wall Street. This is why he's helping them. He needs to cut rates so they get wealthier. In the meantime, everybody else is getting screwed. So if you take the top 1%, they hold 40 trillion more in wealth than the bottom 50% combined. Net worth has jumped from 7.1 trillion in just 3 months. 3 months. 7.1 trillion. Are you kidding? Their net worth per day is going up 79 billion, all because of the stock market, all because of stock buybacks. We've never had something like this, where all the wealth is on one side. In the hard-working middle class, we talked about this yesterday, the people between the ages of 35 and 48 with 2 kids, they're suffering. They're working 2-3 jobs. They don't benefit from the stock market. A record 70% of the consumers believe their income is failing to keep up with the inflation. In other words, inflation is outpacing their wages. And all the wealth is going to the very top 1%. The stock market's been moving higher almost every day because of a handful of tech stocks. Handful. The S&P 500 just completed one of its best 5-month rallies in history. We've rallied 30% in 5 months. 30%, that's insane. What are you, nuts? Since 1975, there have only been 5 previous times in history with a 30% rally in 5 months. Between 2020 and it was 2009, 2020. This is nuts. This is nuts. So we're going to have rate cuts coming, and tomorrow, and he's blaming. Oh, I got to do this because the labor market's so weak. If I cut rates, everybody's going to go buy cars and furniture and everything, and then all that stuff's got to be replaced. So factories are going to hire people, and we're going to have a big hiring campaign going on. And that's not true because nobody's going to be spending because their credit cards are tapped. Their credit, they don't have any credit. They have no savings, and most of them are trying to get their credit cards down. It's a big fat lie. It's not why he's doing it. He's taking care of the top wealthy 1%. So rate cuts are coming in the S&P 500 at a record. In the last 20 times that this has happened, the S&P 500 rose an average of 14% over the next 12 months. Now, with stocks up 30% in 5 months, there has never been a negative return in the following 6 months since 1975. What are you, nuts? This market's so rigged, it's incredible. All you have to do is buy the same stocks over and over and over. And every day, you know which ones are going up. Just make sure you're in Google. Google's the leader. There's 4 stocks that are leading. But the sad part is the middle class who make up the consumption of this country, who makes our country great. Without the middle class, we're so screwed. They are the consumers. They are the ones that hold our country together. Their consumption. They have no money. They're broke. They're broke. This is crazy. This is crazy what's going on. So, gold is telling us something's wrong. What's going on? Something's wrong. That doesn't make sense. So tomorrow they're going to cut rates again. Now, everyone's thinking, well, that's going to be good because what's going to happen now, corporate stock buybacks are going to be off and running again. As soon as they cut rates, they're going to start doing more stock buybacks. I mean, we've had the strongest year to date of stock buybacks in history. In history. I mean, Trump needs to stop these stock buybacks because they're fake, because all it's doing is creating a bubble. There's nothing underneath it. There's no earnings under it. I explain this every time. When you have a quarter that the stock was at $20, they had $1 million in sales, the next quarter stock's at 40, and you look at the sales, did they increase? No, same million. The next quarter, the stock's at 60. Gee, did we have any increase in sales? No, same million. Stock's at 180. Have we had any increase in sales? No. We're hitting the same 1 million every quarter. But the stock keeps going up. See, that's what stock buybacks do. They artificially increase earnings with no sales. Earnings pushes up the stock price. It's fake. Now, so corporations right now, they delivered the strongest year-to-date pace for corporate stock buybacks ever. April alone, that marked the third highest monthly total for stock buybacks in a decade, and the highest annual total on record. So Powell again, the reason he's cutting rates, nobody's ever cut rates into inflation. That's insane. What are you, nuts? That's like somebody walking out of a house with one sock blue and the other one yellow. How many people do that? It doesn't happen. This is crazy. But he doesn't care because he works for them. Going back to 1902, when all the richest families, the Rothschilds, the Rockefellers, all of them controlled the banks. There was no central bank. And when we got that crisis in 1902, they panicked. There's no bank of last resort. What are they going to do? That's when they came up with the idea, well, let's start a central bank. We'll get the government to back it. We'll pay off the politicians, and we don't keep taking the hit. Remember, every run on the banks prior to 1902, the richest families, like J.P. Morgan family and the Rothschild family, they had to take the hit. Well, no more. No more. So from 1902, they finally got past in 1913, was to make sure they became wealthy. Let everybody else take the hit. We saw that during the dot-com. We saw that during the housing com, right? We had to pay for that. So this bubble is getting bigger and bigger and bigger. Because what I just explained a moment ago, you have no sales. Stock prices are fake. So their earnings are terrible, but they come out and say, look how great earnings are. And they're not. They're a lie. Earnings aren't great. They're masked. They're covered up with stock buybacks. So how long can they keep this market going up? As long as they have printing machine, as long as they print enough money to increase the money supply, to shove the money into the banks, so the banks can then transfer the money to the CEOs and give them a zero rate, and they buy their own stock. And everybody sees the stock price going, oh my God, look at the stock price. Everyone's asking, how come Tesla's going up? We kept our gang members in Tesla when it had that big pullback. I said, no, stay in Tesla. I said, the market maker would never allow that to go down.
2 minutes.
Never will he allow that stock to go down. You think he's going to sit there and fight with Musk? No. Look where it went in the last 2 days, and we were in that stock. And I begged her, don't get out of it when it had that pullback. And our color-coded chart, which my charts that we designed ourselves, showed money was still going in, so we knew there was a lot of stock buybacks in Tesla. And then finally, Tesla takes off, and everybody, how'd you know? How'd you know? Because you follow the pricing. You got to follow the money. See, that's what people aren't doing right now. People are just crazy. And they're not understanding what gold is saying. Gold is sending out an alert. So isn't the bond market. Remember, the bond market's your friend. When you have falling yields like we do, look at the yields. The bond market will tell you the truth, not these TV shows. Look how the bond market, look how it's been going down. What's that mean, a falling bond market, falling yield? It tells you that the economy is very uncertain. It tells you that the weak jobs are going to continue. That's what it tells us. But it also tells you you're not going to have a crash. Why? Because of the stock buybacks. People are shifting to bonds.
1 minute.
Our economic growth is stalling. And it's also telling us oil prices are going down, which tells you the economy's not doing well. Remember, oil's in everything from toothpaste to tires to lipstick. People aren't buying. They're hurting. So right now we have, again, the bond market, falling yields are warning. And the gold market are warning. But nobody cares. As long as we have stock buybacks, you can't stop this market. So just keep going up. And Congress is the biggest problem. I'll talk about that when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. I've been doing this radio show and podcast for nearly 30 years. And I have never seen, since I've been trading stocks all these years, where the market is so rigged, it's easy to make money. You just got to follow the money. Don't follow the BS. Don't follow fundamentals. Anybody talks about fundamentals, don't follow them. You got to follow the money. 25 years ago, I already had 25 years of trading under my belt, and I tried to find a chart somewhere that it would just show the money. Is the money going into my stock or is the money coming out of my stock? Nobody had one, so I designed one called Pro 2. And it's a hell of a tool. I used it for myself at first, and then I gave it to my gang members. It shows you if the money is going into your stock. That's what's important. Where's the money going? And that tool became more and more valuable as fundamentals became worthless with stock buybacks. But listen, talk about worthless and bad information. And again, going back to what I'm just talking about here for a moment, is that's what we do every day. We follow the money. We're almost the first ones that got into gold mining stocks. Follow the money. That's what you have to do. And you got to be prepared, because one day, now remember, we're going to have record number of stock buybacks. Once they cut this rate, as long as the 10-year Treasury yield doesn't rally. Remember last year, 1 year ago, tomorrow, they cut rates a half. And what happened to the 10-year Treasury? They thought it was going to come down and the economy was going to boom. It went up and hit 5% for about 3.2%. Now, tomorrow we also can have something else happen. They've been talking about this rate cut for so long that's already backed into the cake, and for the first 2 days you could get a sell-off, and then everybody comes back in buying again. That could happen. That could happen. Very easy. So I wouldn't be getting ready tomorrow to go borrow money and start buying, Amazon, okay, and Tesla, and Apple, and Microsoft. That's keeping the whole market up. So if you listen to this is crazy. Listen to what she says.
Yes, the economy is strong, stronger than probably even we thought.
The economy is strong, probably more strong than we thought. Well, wait a minute. Didn't we just say jobs were strong, but then we found out, well, they weren't? Now she's saying, well, the economy's strong. How can the economy be strong? Was she a dope? How can the economy be strong? We got 18 trillion in household debt. You got record delinquencies, mortgages, cars, credit cards. How can it be strong? We got a housing affordability gap of 57%. That's not a strong economy. How can it be strong? We got businesses. In 6 months, bankruptcies went up 45%. Individuals, bankruptcies went up 24% in 6 months. We got historic national debt. I don't go through all this. You know all this. The labor market's key. The labor market's terrible. It's key, but they don't care. The labor market's what he should be. To take care of the labor market, you got to take care first the inflation. Got to get the inflation down. If you get the inflation down, that helps people. They get a breather. Then they can start saving. And then they can go ahead and start buying again. But this idea you're going to get a rate cut, we're not going to feel anything from that 25 basis points. It takes a year. It takes 1 year. Not going to feel anything. What are you, nuts? The stock buybacks is what's going on. 436 companies has participated in stock buybacks. Only 20 companies, which mostly are tech companies, accounted for 50% of all the stock buybacks. What are you, nuts? Apple. It's in 2024, 1 year. $106 billion. Meta. $177 billion. NVIDIA, $82 billion. I'm talking about just 1 year. Google, $271 billion. I'm sorry, I gave you the wrong number. $100 billion for Apple in 1 year, $43 billion for Meta in 1 year, $47 billion for NVIDIA 1 year, and $61 billion in 1 year for Google. Now you go back to 5 years. 5 years, you got Apple up $460 billion, Meta up $177 billion. This is 5 years now, and you got $82 billion in NVIDIA. In Google, you got $271 billion. So that's what Biden is trying to do. Powell's trying to do now. He wants another round of rallies. So the idea that he's going to cut rates and create jobs is such BS. How are you going to create jobs? The quarter point, we're not even going to feel it for a year. If we feel it at all, that's not going to do anything. In the meantime, people are dying. People, and then they lie about the credit spreads. Oh, the credit spreads are telling us the economy's strong. Credit spreads are telling us we're not going to have a crash. We won't even have a correction for another 4 or 5 years. So what happens is, and what they're talking about credit spreads, Wall Street, I think I said this yesterday, Wall Street, what they do is make sure their clients buy more corporate bonds, junk, rather than government bonds. So if you're buying 5 corporate bonds to 1 government bond, that means the spread is narrowing. The narrower it gets, that means the more corporate bonds people are buying. And that means that they interpret that as there's not going to be a crash. The economy's going to do well. But that's all manipulated. It's not true. It's all manipulated. So if he doesn't take care of this inflation first, the market could keep going up, maybe another year, 2 years, 3 years, 5 years. But the problem is the bubble's getting bigger and bigger and bigger and bigger, and fewer and fewer and fewer people are benefiting. And the middle class that I'm talking about, the 35-year-old to 48 years old, he's the one that drives our country. They're the most important consumer. They can't consume. They're broke. So Wall Street, all they care about right now, and the members of Congress, is to fill their pockets. So what do? Make sure, watch your bonds. The bond market tells you everything. The bond market's a wonderful place. Okay, I mean, it tells you exactly the strength of the market, what it's going to do. And right now with the falling bond yields, and these high stock prices, unbelievable. So the lower the bond yields, that's implying lower interest rates, okay? So we know that they're going to cut rates. And the falling bond yield with these low interest rates, that means that bond prices will increase. And that means increasing the market value of your portfolio, your bond portfolio. Now, investors are going to shift from value stocks to growth stocks as we have the yields continue to fall. So make sure you watch that 10-year Treasury. It tells you exactly what group of stocks to be in. It's telling you right now you've got to be in growth stocks. You can see that just from gold alone. Now, when you have the falling bond yields, it's telling you exactly the market's forward-looking and say, look, going forward, our economy's going to be terrible. Okay, our job openings, which is the most important one, JOLT, is going to get worse, telling us that. And we also have, again, this big demand, okay, for, again, now they're all going to go to these growth stocks now. They're all going to go to the tech stocks again. So you're going to have 5 or 6 tech stocks that are going to be rallying. So the bottom is, if you're in value stocks, you're screwed. You got to get out of your value stocks. Now, we've been in the banks. We used to always consider the banks value. We always considered tech growth. But the banks now, because they don't want high interest rates because of all the delinquencies, so the banks were treating them as their growth stocks now instead of value stocks. So we've had our people split between gold and the bank stocks. And we also have some shorts on. But remember, if anyone asks you, what do you think the market's going to do? Tell them it's just going to continue to go higher. And you're going to know when the market's going to crash by watching the bond market. And you're going to see one day when all of a sudden you look at the margins and the debt keeps going up, margin counts, margin, and all of a sudden starts going the other way, you know you better get ready and start learning how to sell short. It's very, very important to understand that all of a sudden that margin debt that keeps going through the roof, everybody's borrowing money to buy these 4 or 5 tech stocks. When that margin debt, all of a sudden they get hit and it starts coming down, get ready. The market's going to collapse inside. It's going to just collapse on itself like a cheap suitcase. So watch that. That's very important, that margin debt. And then stock buybacks. Right now, you look on a chart, stock buybacks are going like a rocket, just straight up. Massive, massive stock buybacks. So it doesn't matter if our economy's terrible. It doesn't matter if the stock market, if the corporations are terrible. And the corporations are terrible. The corporations, the earnings are awful. There's only a handful that's doing well. But it's all that stock buybacks keeps everything going. So you got, now think about this. We had 436 companies, okay, they participated in the stock buybacks, but only 20 of the 436 accounted for 50% of the stock buybacks. And it's the IT sector where all the money's going for stock buybacks, $275 billion. So make sure you know what stocks are your IT stocks. And we can help you with this. We can help you. I mean, we've done terrific because we don't follow the noise. We follow the money. You got to follow the money. So again, now let's go the other way. What happens if you have bonds instead of yields falling? Let's say the bonds turn around and they go the other way. Say yields start going up. What's that mean? Well, you better get out of your growth stocks, like tech stocks. You better move to value stocks. So you got to watch that, because remember what happened last year? Everyone thought the 10-year Treasury yield was going to go down, but it turned around and went straight up. So you got to switch to value stocks. We'll show you how to do that. We'll show you how to do it. So you'll have to get rid of your growth and go back to value. Because again, these rising yields mean interest rates are going higher. And higher yields means higher interest rates. That means bond prices are going to decrease. And you're going to be in real trouble. So you got to make sure you're in the right stocks, okay? So the bottom line is this. When they report tomorrow, and they start cutting the rates, the first move is always the wrong move. So when they make their rate cut tomorrow, if you see the stock market shooting up, it'll turn around and go the other way. If you see the stock market going down, it'll turn around and go back up. It always happens. Okay, most of the time, I shouldn't say always, but the majority of the time, it'll turn around and go the opposite way. So when you're sitting here watching on your computer what's going on, when they cut rates, and all of a sudden you see the stock market going down, don't start buying, tech stocks, because that can turn around and go right back up the other way. You don't. That's the market makers. He's got his order book, and he plays with that order book. We'll show you how to trade a market like this. He's got his orders. He's got his buys and he's got his sells. So he manipulates them. But the saddest thing about all of this is the market is the best place in the world to be. The reason 90% of people lose money in the stock market, the retail investor, because one, they trade too many stocks, and they don't know how the market works. They're following everything except the money. We have the tool that'll help you follow the money. Work with us for 10 days, it's free. Well, I hope I helped you a little bit, okay? So we'll see what happens tomorrow. philsgang.com, check it out.
Listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to